Good morning, everybody. Hope you had a great evening last night. It was delightful in Wichita, Kansas. It was about 80 degrees yesterday. They missed their forecast of a high of 77 as we set out on the deck. Really enjoyable. So I had a good time. We got another couple of days. They do have rain in the forecast for our part of the world. If we get it, it's beneficial for the corn and bean crop. So life looks pretty good for corn and bean farmers and maize farmers in Kansas this year. Sunflower seed producers too. And the grass, the backgrounding for cattle. So outside of wheat, which I think this is the lowest harvest we've had since the 80s, it should be a pretty good agricultural year for Kansas production. So that's good for food prices, long haul. Last night we had news out of China. Their growth figure came in at 7.5 versus the expected 7.4. In Europe, the Portuguese bank Esposito, I believe is the name of it, is rumored to be going to be getting a capital injection. The problem with that bank spilled into a telecom company yesterday, so something will have to be done. The problem for so with the rumored money injection by somebody, party was not named, and with China's better than forecast growth, stocks rallied in Europe and they've rallied a great deal in the United States. We also have industrial production today. Is the number that will be watched, and it's called up 0.4. And if that number is exceeded, if it comes in higher than that, then I think the way is open for the E-mini to make new contract highs. And the way the stock market is acting, it's acting like this number will beat its forecast plus 0.4. We have PPI this morning up 0.2. No one will pay any attention to it. We have long-term capital inflow, forecast up 27 billion. The estimates for this are just totally off the wall. They almost never come in forecasting a negative number, and every other month it seems to be a negative number these days. Housing index 51. 50 is neutral. 51 shows growth in the housing market. They'll like to see that. Crude inventories minus 2.1. And then Fed beige Yellen, and she won't do anything any different than what she did yesterday. And then the beige book. And the beige book will be looked at pretty heavily. They'll be looking for signs of increased growth in the Fed's 12 regions or decreasing growth. And that'll give them a better feel for the economy. So I think the news focus is purely industrial production, maybe the housing index, and then definitely Yellen's testimony in the beige book, how the market will play. Okay, if we look at the structure, you can see volume held yesterday. The overnight session volume is lower. We have a D pattern in volume, and we have a B pattern in TPOs, and we got a new move or mom out of the middle, so this favors selling. Structurally, the sell would be at 28.5, so I put a sell 28 to the buck, and then 3 to 7 for sell 2. In any event, I don't think we can break this market out to the upside, and part of that is just because of the primary dealer pattern of selling the market post-auction to set up the next auction. On the buy side, we have a lot of volume down below in this 11 to 18 area, so I think we are headed lower, so I put our first buy 21 to 17. And if the market does break support at 24, we'll wait for a setup pattern. And then 9 to 13. And I think the best buy comes at 9 to 13 because of this volume that we have down in the 12 area. So that's what I see on the ZN. Now, if we don't break 24, we'll have to come back in and raise our buy level. And the reason I say that is given the news out of China on a headline basis, and given the news out of Europe on a rumored injection of capital into Portuguese Esposito Bank, the stock markets in Europe and the United States are up quite a bit, but the financials aren't that much lower. So we may have pretty good support down there in the 24 area. So I'm counting on the play in the stock market right now that somebody is guessing that industrial production comes in greater than 0.4%. That news comes out at 9:15 Eastern, so we have time to set up our trades this morning. Looking at the 30-year, well, that doesn't do that on the second half. Put that little pop-up box there. Same situation. Right here structurally we have this W high, so the sell will be 37.04. Then 7 to 11. On the buy side, leaning against the slowdown here, the low's 25, so we're 12 points on the knob spread. It's holding in actually pretty well. And then 9 to 13 will work on this one too. So I'm playing for a little bit lower based on the structure and what's happened, but the bottom hasn't fallen out of the financials overnight on the news out of China. So I think the financial players look at this and say, oh, okay, I see the headline, but the body of the article isn't all that strong. And again, once you get past the headlines and you go in the body of the articles, they have to come up with a lot to really support the headlines, and they don't in the body of the article. So you have everybody out there, every central bank wants the financial press to write in glowing terms about the economic expansion and growth that is coming, in the process of coming right now, and then everybody's pretty disappointed. So we got resistance at 1300, stops over 1300, sell one. We have a pause day. The market will be searching for resistance. Then 5 to 7 will be sell two. We usually get a pause day after a trend day. Then we've had 2 trend days lower, so some consolidation. I'd see a seller 1300 to 1305. We were hoping to buy the 90 to 92 area. Didn't get it. We'll start out then this morning trying to buy 90s to 92s, a little bit lower, but really may have to pay 95s. Don't know. We may have a 95 minus 1305 plus market when it's all said and done. Just have to see where the first rotation stops. And I do really like the buy in the 85 to 87 area. And the only entity out there that could be just going and throwing $1.5 to $2.5 billion at the market all at once is a government central bank or entity. It is planned, and this is chump change for these central banks. And don't even blink an eye about spending a couple of $1 billion of somebody else's money. And why would you? It's not your money. You're not held accountable for it. And that's the problem in government today. Your elected representatives supposedly are held accountable for what they're doing, and I probably do the same thing they do. They get up there and they say, keep your mouth shut, vote the way that we tell you to vote. You'll be a millionaire if you can make it 6 years. You'll be fully vested in your retirement. You'll have access to all sorts of good deals. You're protected by law. You can trade off of inside information. You can get cuts and pieces by people that support you politically of equity deals. Don't have to put up any money. Just vote the way that we tell you. And I mean, for the average bear, and most politicians, unless they are extremely wealthy don't go to Washington with a lot. If you go read their backgrounds, you'd be surprised the number of DUIs, bankruptcies, divorces, etc. So it's a very, very compelling argument, and the average bear, and I classify myself as an average bear. I mean, you'd have a hard time saying no to it. You just have to play the game, travel a lot, be willing to eat subpar standard food, and get up there and talk out of both sides of your mouth. Okay, crude oil. We like the sell in the 100 area. I think that's still a reasonable trade. It's where we are. We've had a couple of big days down. We recovered nicely yesterday, so this 101, 101 and a quarter area is our sell one. 50 to 79, pretty much where it was yesterday. Sell two. We had hoped to buy much lower yesterday. We didn't get a shot at it. We're at 77, so we'll make 100, 100 and a quarter, buy one. And then 50 to 75, buy two. We thought when we took out 102.50 we would go to 100. We did. And right now, it shouldn't surprise anybody that we have support under $100. The key is, can we get through 101? Okay, on to the euro. The euro was sold overnight. That money to support Portugal has to come someplace. And I put another article up. And again, I mean, this is not rocket surgeon stuff. The problems in the EU are formidable. And they have to find a way to get this bad debt, bad sovereign debt off banks' balance sheets. And they haven't done it. They came up with a 3-year repo. And that got the banks, at least on paper, solvency, but you know, I think in one more year all that paper comes back, so obviously we'll get another repo out of it. But it's the same problem we have in the United States. Eventually economic law or rule prevails, and I put a chart up also showing the GDP of the United States versus total debt obligations, and something's got to give. Once you go past 2 to 1 total debt obligations, it just takes a while, but a lot of that debt will be defaulted, and I mean, it's the only way it can end up. Okay, we've had 135.50 to 75 is now resistance. We're currently at 34. We were pretty confident that we're headed to 35. The news out of the ECB with the Portuguese banks is somebody's got to pay for it. So I think we're headed a little bit lower, but we probably won't break. Buy two will be 135 even. I think that is our trading target, 135. We've been talking about it here this week, and I think we're going to get there. On the sell side, we broke support at 54, so 50 plus or minus will be sell one, and then sell two is going to be our 75 plus or minus. And again, the easy trading comes in Europe, London time, as Roger pointed out yesterday, and Jeff. They both have to go to bed a little earlier than the average bear does. But it's gold and the euro, wonderful opportunities if you can trade London time. Okay, everybody's favorite market, the E-mini. And because the stock market is held in front of us daily, no one talks about the bond market and what it did today. The only talk we'll get here about the bond market is what our mortgage rates, and those are reported daily. But past that, no one in the evening news reports what the 30-year and 10-year rates are. Can't get rich, supposedly trading bonds. Okay, the Chinese news, 7.5 growth, greater than the 7.4 which was projected. The Portuguese bank injection of capital from somebody. It's got to really ultimately come from the ECB, which is why the euro is down. And then today's industrial production, which somebody knows what the number is. It was passed out yesterday at 4 o'clock. So I say the market is playing for a better than forecast industrial production number. Now, if it doesn't come in that way, there is disappointment. So I think the market is set to make new highs if we get an industrial production greater than 0.4. The news is flimsy, and we know that. We know that high-frequency trading have news algorithms right now, and they read the headlines, and if it's better or worse than forecast, some of those programs kick in. It keys off the headline. It doesn't key off the paragraph. The longer-term fundamental player will key off of what's in the paragraph. And so right now my guess is we're playing for better than forecast industrial production. And if we do get it, I think we can make new contract highs. Now, I can argue logically and talk all day long why the stock market shouldn't be this high, as most people who follow fundamentals can. But nonetheless, it is, and you can't be stupid. And if you had to make a trade at the market, you'd still be on the buy side. Last night, Apple and IBM announced a joint venture where they're going to work on wireless communication devices. Intel beat their earnings per share by quite a bit. Goldman yesterday beat their earnings per share by quite a bit. 14 companies announced today. And I don't want to say the earnings per share is a rigged game, but these large companies have many, many ways to meet and exceed their earnings per share. And it's good for everybody. It keeps the SEC off your back. It keeps the investors content. It allows corporate management to do stock buyback programs to increase their compensation. So beating earnings per share shouldn't surprise anybody. It's how the game is played these days after the Oxley-Sarbanes Act. So here we are. I think we're down to industrial production. If it comes in greater than forecast, we make new highs. So the trade today is to sell failure to take out 76, 78. And we're down to a news event. New contract highs. This thing tends to move in 20s. So if we added 20 to 67, that would take us up to the 87 area. So the 85, 87 area would be the sell zone that I would be interested in. And then obviously you've got to get through 80. So I'm putting resistance 80 to 82. And we'll adjust that after the news. And I think the easiest trade to see is to sell failure to take out 76, 78. It is resistance. Then the 85 area plus or minus. On the buy side, if the news does not come in favorably, we're at 74 right now. Last rotate down was 73, excuse me. So it's aggressive as can be. The 10:15 industrial production news Eastern time. Buy 1 will be 70, 72. Buy 2 will be 65, 67. You know how we've liked to buy the 60 to 65 area. And that's where I have support right now. But this market, for the first trade of the day, if you're going to play from the long side, you have to pay up. They will not let you in. Later during the session, you can usually come back and get in at the levels that we desire to get into. But right off the get-go, right off the opening, you have to pay up to be long.